Welcome to the Specialist Trading Weekly E-mini Review for the week ending April 21st, 2111. In this week's review, I want to discuss trading ETFs with strategy number 1. Even though this is an E-mini course, you can transfer over strategy number 1 as well as our other strategies onto ETFs which mirror the E-mini. So I'm going to discuss how you can do that and how you can have some really nice trades as we saw this week. But before we do, I want to remind you all that we're in a current promotion with Global Futures. Global Futures has been my broker, and they have a really nice deal that is continuing to go on for people that want to open up a new account with them. If you mention coupon code SP20, you're going to receive 20 free contracts when you open and fund a new account. Now, please give the premier broker there, Michelle Jimenez, a call directly at 818-670-7733, and she can set you up right away. And be sure and tell them that Specialist Trading sent you. Now, before we begin, as always, we ask that you please take a moment to view our disclaimer. I'm going to show you performance results using strategy number 1 with ETFs, but remember, we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's E-mini review. All right, what we're going to discuss this week is trading strategy number 1 with ETFs that basically mirror the E-mini or the market in general and are a higher time frame. Mostly we focus on trading all of our strategies in a smaller time frame, from anywhere from 1 minute to 60 minutes, but we rarely look at daily charts, and we're going to start looking at some today just to show you that all of our strategies can be traded in any direction and in any time frame. As well, we do not always have to focus on the E-mini. So many of our students, especially the new ones, will ask, can these strategies go on to another market? Say I want to trade an ETF or I want to trade a stock. Most definitely, they transfer over with just a few slight alterations, but the core of the strategies must stay intact. So I'm going to explain to you today how you can apply them to ETF trading, because there's a large interest with a lot of our students that want to trade ETFs. Now, just as a refresher course, strategy number 1, let's go over the indicators here. There are just 2. It's a very simple, basic strategy. As always, the main indicator with all of our strategies is the buy-sell line, the 50-period simple moving average. And this is extremely important because, as a refresher course, the buy-sell line is going to tell you whether you can enter the trade or not. So remember, once again, if price is above the buy-sell line and we get a buy signal, then we can take the trade. If price is below, then we can't. But if we get a short signal and price is below the buy-sell line, well then great, we have a valid sell signal. Now we also want to use our standard indicator for strategy number 1. That's the 21-period Donchian channels. Now, if you're not familiar with the Donchian channels, they're just about on every charting software package. If your charting software doesn't have them, call up tech support. They should be able to furnish you with them. And remember, many times the Donchian channels have a default setting to 20. We use a 21 period as our pretty much our default setting. Okay? All right, so why don't we begin? This is a daily chart of the E-mini. Okay? This is our standard daily E-mini chart. And as you can see, we've applied our buy-sell line as well as the 21-period Donchian channels. Now, what we want to see is that if we're looking for buy signals, we want to see that the Donchian channels are all headed in the same stair-step upward direction, as you see here. Now, they're not going to all be in sync with each other, as you can see, but it should be headed in the same stair-step direction. All right. Once we see that, what we want to look for is our setup bar. Now, our setup bar, circled in blue here, must meet all of the qualifications. I'm not going to go into detail what the qualifications are, but if you're not familiar, just once again, go back to the video learning section under strategy number 1. We explain in detail how to find the setup bar, because the setup bar is extremely important. It's going to tell you whether you can take the trade or not. Because if you find a valid setup bar, as we have circled in blue here, this means that you can go long the E-mini, in this case, once it trades 1 tick above the setup bar. Now, this looks perfect. It's a perfect setup to go long. We had this week. In fact, this was issued on the night of the 18th, which was Monday night. So we wanted to go long Tuesday morning, except for one thing. All the rules fell into place except for one thing, and that's the most important. And what that is it's our buy-sell line question that we must ask before each and every trade, and that is, where is price in relation to the buy-sell line? Now, here's our buy-sell line right here. So if we ask ourselves that, we see that price is below. So if we get a buy signal, but price is below, then we cannot take the trade. Now, the reason why is because over time, on balance, these trades will not work out in our favor. We either will not reach our objective, our target exit, or we will turn the trade into a loss. So, excuse me, what we want to do is play the numbers game. We want to have the odds in our favor, and the odds are in our favor if we get a buy signal and price is above. But the odds are not in our favor if we get a buy signal and price is below. So we will only want to stick with high probability trades. All right, so this is not a high probability trade. Having said that, does that guarantee then that it will not work? Well, no, it doesn't, because from time to time you will get these setups where you should not take the trade, which you should void altogether, and look what happens. The trade works out completely and it goes in your favor. Now, this is something that especially beginning students of mine, we have a number of beginning students here at Specialist Trading now, will look and say, well, Steve, how come I didn't take the trade? I mean, it's below the buy-sell line, but it worked. Remember, this is a numbers game. You will see from time to time things work out perfectly even though you didn't take the trade. But over time, once again, we're trying to instill this level of consistency and of high level of probability trades. And if you do take these trades, you may have a number of them that work out, but it's that one that doesn't, which will give back everything. So we're trying to get this consistency in your trading. So having said that, and be that as it may, a number of students, are a little discouraged by this. But here's one way to alleviate that factor. Simply because you cannot take the trade in the E-mini does not mean that it doesn't transfer over well and it's not a valid trade in another trading unit. So this is why we suggest to trade comparable ETFs such as the SPDRs, the QQQs, the diamonds, and the IWMs. That's an ETF off the Russell 2000 index. So the E-mini, all it does is basically reflect the S&P 500. Now these other ones, the QQQs I should say, represent the NASDAQ market. The diamonds, the DIAs, represent the Dow, and the IWM represents the Russell 2000. So let's see if we got comparable signals in these other markets. Looking at the SPDRs right off the bat, well, we apply the same rules. We apply the buy-sell line, we apply the dodging channels, and once again, where is price in relation to the buy-sell line? Price is below. So even though we have a valid setup bar, it's not 100% valid because price is below. So we can't take this trade. Even though later on in the week we saw that things worked out perfectly, we should not have taken this trade. Let's look on to another ETF, the QQQs. Well, we have the setup again. The dodging channels are all headed straight up, but where is price in relation to the buy-sell line? Price was below. On that same day, we got another valid signal, but we couldn't take it. Why? Because we were below. So let's keep looking to see if any other ETFs fit the requirements and will enable us to actually take the trade. So let's look at the, whoops, kind of skipped one here. Let's look at the diamonds, all right? We have the dodging channels headed in the same stair-step upward direction. And guess what? Here's our setup bar. And where is price in relation to the setup bar? Well, price in this case is actually above, meaning that not that we closed above and not that intraday we went below, but meaning that if we decided to enter using this setup bar, our entry would be above the buy-sell line. So this was a valid signal. So even though you could have gotten discouraged and said, boy, I see a perfect signal to go along the E-mini using strategy number one, well, guess what? It didn't work in that particular market, but it would work in the diamond. So you could have just as easily transferred it over onto this market. You could have either traded the ETF, which is a stock based off of that market, or you could have traded the future, the diamond future. So there's lots of different ways to trade it where the strategy works just as well. And just as well, it worked on the IWMs. That's a Russell 2000 ETF. Even though we, on an intraday basis, went below the buy-sell line, our setup bar was telling us we could enter above the buy-sell line. So this was, once again, a valid entry. So in this particular setup, you would still actually be long the IWMs, or the future that is based off of the IWMs. So In conclusion, what we're trying to tell you is that many strategies, not just strategy number one, but many strategies will not let you get into a trade because of all of the rules. And we want you to follow these rules once again to increase your odds for success. But just because in one market they do not apply, they may easily transfer over onto the same, using the same signal and the same rules onto another market on the same exact day. So look at these different markets as we've shown you here. If you're looking at the E-mini and you get some signals but you can't actually take the trade, it's not valid, also check the spiders, the QQQs, the diamonds, and the IWM markets and see if the signal applies to those. Then you will be able to take them and you use the same rules and they will apply just as well. As you saw, it didn't work on the spiders or the QQQs, but the same signal will work on the diamonds and the IWMs. You would have some very nice gains this week using strategy number one on them. As always, in order to take advantage of what we're trying to teach you here, you must learn the strategy. So it's not just enough that you come to these weekly webinars and think, oh, okay, well, I'll start looking at the diamonds now and I'll just trade whatever strategy I feel comfortable with. You have to learn the strategy first. You have to really understand the nuances and the process behind all of these strategies. So the only way to do that is to go to our video learning section, watch all of the numerous strategies we have, and then pick one or two that you feel comfortable with, and then paper trade those strategies for a week, a month, however long it takes you, so that you fully understand the process. Once you do, you'll have the specialist edge, which is seeing a consistency in your results in trading. Now, if you have any questions concerning what I went over today or anything on the website, please do not hesitate to email me at stephenprimo@specialisttrading.com. In closing, I ask that you take one last look at our disclaimer. I showed you the performance results using strategy number one on different ETFs this week, but remember, we can in no way guarantee that any of these results will be repeated in the future. So, I ask you to please watch this video as often as you like, or any of the videos in our video learning section, and also have a nice extended weekend. Enjoy it, relax, and we'll see you right back here next week. Bye-bye.